Okay, I want you all to confirm that you can see the screen. Then we commence.
Yes, sir, I can see the screen.
All right, all right. Good evening. Okay. Tonight is our last class on course classification, segregation, and course estimation. Previously we have discussed about the classification of costs and then how each of the costs is being usually used. And last class, we also discussed about one of the cost functions, which is a high and low method. Tonight, we will be discussing on linear regression, where we'll be able to do one or two exercise in order for us to get fully understanding about linear progression analysis. And as you can see the display on the screen, I will explain briefly, and then I will move to the calculation aspects so that we can broaden our knowledge on how these linear regression works using a cost function. And one or two people among us might have familiar with what linear regression is all about. It's a well-known statistical tool that we usually use to find a relationship between two variables, where we have independent variables and then dependent variables. And in these costs, we want to make use of this linear regression on how it is useful in a cost estimation, how we can use it to determine cost function. And there is one formula which is very important that we have been using since we started this cost classification, which is y is equal to a plus b and x. I want to believe that we still remember what that stands for. In this linear regression, the way we usually use it, it's the same thing, but a little bit more broad. In linear, what is it called? In high and low method. High and low method only deal with the fixed cost and then the variable just to help us determine our total cost or help us to know how the cost structures or cost function is all about. But in linear regression, it uses all the available data, not just restricted to the high level of activities and with associated cost, or low level of activities and then the associated costs, like the high and low method is all about. But in this linear regression, it is more broad. It is more broad. We use all the available information provided to determine our cause functions. Now, in this linear regression, the relationship of how the dependent and the independent variables is being used is expressed as y is equal to a plus b and x. Where x is our dependent variables and x, which is we usually know as our level of activities or production levels based on how the data's information is being given. YA is our fixed cost, interception is the one that is fixed for a period of time. YB is our variable cost, as we explained. This is how we are going to use this same formula when we are preparing linear regression. And the question here is, why is linear regression matters in management accounting? Linear regression, if someone that do not related to accounting field or management accounting field, yes, where an accountant or management accountant is been discussing about linear regression. They might be confusing that what an accountant is doing with linear regression. Linear regression is a statistical tools where we can use in a different fields to determine a certain level of activities, that can help us to make an appropriate decision. So why it matters in management accounting? Number one is cost estimation. It helps us to separate our fixed cost and then the variable costs whenever we are giving mixed costs, whenever we are giving mixed costs. That is the number one key things why it matters when it comes to management accounting. And then the number and forecasting. Use linear regression in a forecasting. It helps us to provide some vital information that we can use to prepare our budget and then make a future forecast about an organization using the provide available data. After all these things, where we're able to, separate the cost, making budget and budgeting control and forecasting. The major aspect of it in what we are to achieve in all these things is to help an organization to make the right decisions. So that is why the third one is all about decision making. Manager have to predict effectively on the change based on what they have already, the data they have processed, the volume of the sales, the cost driving, cost to all those things. That is why the linear regression is very important in management accounting. And then more reliable than high and low method because it uses all available data instead of just 2 points. Like I explained earlier, linear regressions give us more details, more information. It's not only restricted to the high level of activities and the lower level of activities alone. In these aspects, linear regression helps us to use all the available information, all the available data to make a proper decisions that can help an organization. Like you said, in add and load method, we only consider the higher one, the lower one, and then all the associated code. But in this linear regression, is totally different. We utilize all the available informations in order for us to uh, get and provide a well sufficient information that an organization can use in making a relevant decision. You can see the regression analysis and then the high and low method, the comparison. Talk about the aspects where they are important and then the differences between two of them. Usage, the data used. We use high and low, where this one we're able to use the full available data. The level of accuracy, in high and low method, we have less reliable because we only determine our activities, our informations in based on only 2 points. We determine it based on only 2 points. This one can make our level of accuracy to be more lower. While in regression analysis, it is more reliable because we are making decisions based on all the informations available. The reliability measure, in a high and low method is very, very low. While in regression, it provides the correlation coefficients. The complexity, it's in high and low method is very, very simple because we are only determine using only 2 points. The high and low, and then why in regression analysis, which is a little bit more complex because we have to utilize all the available resources, and whenever we are using it, we have to pay more attention to the details in order to help us get an accurate information that an organization can use in making a relevant decision. Now, a regression analysis formula. Okay, how is this? Okay. Regression analysis formula. As you can see it on the screen, it can be a little bit more complex, but it is very, very simple. Very, very simple. The only thing that we all need to do is just to, put it on our head. Whenever we see any questions related to regressions analysis, we will be able to put it down. And I'm very sure, what I can usually do is they help us to, maybe at the back of the question papers, they put all those formulas where we can utilize them whenever the related questions comes in. But regardless to that, we still have to know it on our own and know what each of these diagram or what it seems like a little bit more confusing stand for. All these things is just for us to ascertain our cost functions, where an organization can use it whenever they are making some proper decision. Our y is equal to a plus b and x is the one we are trying to break down here in regression analysis. As you can see from the formula, we say our a is equal to sum of y into brackets and then sum of x squared into bracket as well minus summation over x, into bracket and summation of x and y. And then we divide it with the n and the summation of x squared. All these things, if you are saying it to be a little bit, what is all this? But you need to know the formula of A and the formula of B. once you are able to know all these things, it will really help you to know how to apply them. Even though the formula is given in the question is, did you know how to apply it? Because that is the most important thing. You might decide to climb the formula, and then in the application level, you are finding it very difficult to apply it. That is where we need to pay more attention when we start the calculation aspect, so that just when we are summing this, we should not allow it to confuse us. The most important thing is just to pay an attention to this and know how each of these formula is being done when we are calculating it. We have made mention of the X, Y, and what they stand for. But you have to know what is the formula for A, what is the formula for B. All these things we just have to get our cost function. But the number two thing is you have to calculate for A before you be able to calculate for B. That is another thing that we need to pay more attention to in these aspects. Then we say where X and Y is equal to the value pair of the data. X and Y is our pair value of the data. In the question, it means they are going to give us all these informations relating to X and then relating to Y. What is X? X is going to be our level of activities. Y is going to be all the associated costs related to X. That is why we see the value of pair of the data. Like I mentioned, this one, we are not only basing our information in only the high and low alone, like we did on the high and low method. No, we are utilizing all the available information given to us in this aspect. Now, N, what did the N stand for? The number of pair of value for X and Y. Okay, it might be confusing. N stand for how many months is this information that they give to us. Is the information just for 2 months? Is it for 3 months? Is it for 4 months? The N help us know the period of the pairs of the value of the informations given to us in the. I want to believe that we are getting the explanation one after the other. Why these this symbol stand for summation. It's a gray letter. In a grid word, it stand for summation. So the summation of our X, the summation of our Y, the summation of our S square, that is what these symbol stand for. And under you will see I put notes. The time A, and I know I've explained it, but I still have to read it so that we can also get what it all about. The term B must be calculated first, as it is used in calculating A. Sorry, before I say A, I have to calculate first. No, we have to calculate B. Then whatever we get in B will now help us in calculating our A. I come up with the steps and approach in how we can use all these the formula of the linear regressions. Number one, we have to collect the data. Our data stand for the X and Y. We have to get all those historical data, the level of activities, and then what is the associated costs. The second one, this is where we have to plot the data. I'm going to display to us when we start the calculation. We have to plot it. How are we going to plot it? We plot X, we plot Y, Do you want to sum the summation of x? You want to sum the summation of y? So that is what this number, the step 2 is all about. After we have plot all these things, then we have to calculate for b using our formula. And then we also have to calculate for our, that is the fourth step. Then we also have to calculate for A once we have calculated for B to determine our variable costs. Why the step 4 is where we'll be able to calculate for the fees cost. Then the fifth step is where we are to write the equation. You know, if you remember in high and low method, firstly, once we're able to come with the high and the low level of activity with the associated cost, then it helps us to know the differences. Then we use those differences to ascertain the variable costs, and then after we use it to ascertain the variable cost, then we're able to determine what is our fees cost. And then we are now going to use all what we get to determine our cost functions. That is what the fifth step is all about. And then the last step, which is the sixth step, is after we have creating the cost function, now we can be using that cost functions to make decisions, to make predictions based on the future outcomes. Now, the key advantages, we can, this one is we use all the informations, use all the data we have. All the data has to be accurate. It is more accurate. I said earlier that in a high and low method is less accurate, but in this one, it's using all the provided informations. It helps us to come up with a well-structured informations after we have processed all the data. Provide a scientific estimation of cost behavior, and then we can use the strength of relationship. That one is talking about where we can use the correlation coefficients. So the tips that we need to remember, always start with a scatter plot. What do they mean by scatter plot is once they give you the question, you have seen the X and Y because they have to give us in the question. The next step is to plot your graph. Plotting this graph is where you have to get all the summation of X, summation of Y, summation of XY. That is what it's all about. And then you don't have to forget that we say our A stand for fixed cost and then our B stand for variable cost. These are the key things that you need to put in your head whenever they give you any questions relating to linear regressions. Now we are going to start this first exercise. This question is one of ICANN past question 2017. So, and then you can see from the requirement. And one thing that we need to know in exam, most especially in ICANN exam, before you can read the question, please always go to requirement first. Know what they ask you to do. Once you're able to know what they ask you to do, believe me, you are free to go. At that moment, you'll be able to determine if you can attend this question or not, because you have to utilize your time very well. Immediately you see the question, just go to the requirement and know what they ask you to do. Immediately you're able to see what they ask you to do, then you will be able to know how to utilize your time. You'll be able to know how to utilize your time. You'll be able to decide, can I be able to answer this question or not? Immediately you're able to know that very one very well. You are free to go, because once you see the requirement and it is straightforward and you see that it's something you can answer, just go straight to the question and answer it without delaying yourself. Now I will give me a few minutes. Let me share the screen. on where we are going to do our calculation using Excel. Then we can start. Give me a few minutes to display that to you. Okay, I'm coming. Give me a few minutes to do that. Okay. All right. Oh my goodness. Where did I send you? Away? Please, I'm coming. Few minutes. Okay. Oh my goodness. Sorry, I'm coming. I've placed it before. I'm just trying to reopen it so that it can display very well for me. Okay. Now let me share the screen so that we can all see it. Let me share the screen. Okay. All right. I believe we can see the screen now. I believe you can see the screen. Okay. Did I send you this? Okay. Now, this is the question that we are going to solve. We are only going to focus on the second one that said the linear regression analysis, and then we should determine the line of the best. We have prepared this high and low method in the last class, and then I want us to go through it after the class, and then using this information to also prepare the high and low method so that it can broaden our understanding on the two area very well. Okay. Now, I'm going to read it, then we can start. This exercise, some of the manufacturing expenses are easily identified as fixed and directly variable with production. The cost accountant of the company is fixed with the problem of preparing a budget for the coming year, and wishes to determine the fixed and variable elements of the fixed overhead, VAT overhead. Now, the following monthly information in respect of the outputs, and then the mix, the factory overhead as provided as follows. Now, they want to prepare a budget, and then the cost accountant or the management accountant of the organization is having issues in preparing the budget for the coming year. And then he wishes to determine the fixed and the variable cost from the mixed cost. Our mixed cost here is our factory overhead. It means this factory overhead comprises of variable and then fixed costs. Now, to easy the work of the management accountants, they want to split this cost into variable and then the fixed cost. Now, how are they going to do that? They now come up with the idea that they should use the linear regression approach or linear regression analysis to determine the variable cost and the fixed cost, so that they will be able to come up with the cost structures or the cost functions where the organization can use to prepare the budget and also make a future forecasting. Now, the requirements say calculate the fixed, the variable element of the mixed factory overhead. Now we are going to prepare the linear regression. I want us to pay much more attention to this, and then to also know how this formula is being used. Wait for me, let me copy the formula to the Excel too. So that when we are doing it, we can, okay. Now I believe we can see the formula too. Now, okay, let me, okay, I think it's good. Let me utilize this. 1, 2, 3, 4, 5. All right. Now, the number one that we are going to do is we have to prepare a table. You know, like I made mention from the step, from the step that we have to plot our graph. You know, we have to plot the table that we are going to use, and then it's going to based on the best fit. We are going to determine what is our X. I'm coming months. You know, this one is months. If it is on a yearly basis, we have to base it on a yearly basis. But what we are using here is from January to October. Now, from January to October, okay, solution. All right. Solution. Please pay attention to this. Pay attention to this. All right. Now, we want to determine our X and our Y. Remember that they give us these two. I made mention that they are going to give us the X and Y because those are the available data that we are going to utilize to separate these two costs. Now, our X stand for the units, the level of activities, while our Y stand for the associated costs of this. Now, as you can see now, I will just copy our Y. I will copy them. You know, I will paste it under Y. Then our X, which is the associated cost of each of the level of activities, I will also place it and put it under Y. Now, the available data, now we have put them in the necessary positions. Now, based on the formula, they said we should calculate for X square. Now, S square, I'm going to put S2. I believe we should know that it stands for S square. I don't want to take time by trying to like locate where the formula is, not to waste much of our time. And then they say we should look for XY, which means the summation of the XY. Now XY. Okay, this journey. All right. Okay. Mr. Dan, did you raise your hand? I can see your hand up. Please, let's just focus on these solutions so that we can all get what it's all about. Now, you can see from the formula, they ask us to look for X square, and then they also ask us to look for the summation of XY. Now, what we are going to do, I want us to carry our calculator. If we are with calculator, if you are not with calculator, just pay attention and see how I'm doing it one after the other. Now, the number one is we should calculate for S squared. Now, this is X. Our X is 150. Now, if you have calculator with you, just the x 150 raised to power of 2 is going to give you 22,000. Okay, sorry. It's going to give you 22,500. That is the s squared. Now, what is our xy? It means xy, we are going to sum x multiplied by y. This way just to get the total of the x and y. Now you say x, which is 150, multiplied by y, which is our associated cost. Now it's going to give us 12,000. Now what I'm going to do here, I will just drag this one down, not to waste time. When we are doing it, we are still going to arrive at the same answer. And then this one, I'll be doing this one after the other so that we can be on the same page. 200 raised to power of 2 is 40,000. Now 300 raised to power of 2 is 90,000. 250 raised to power of 2 is 62,500. All these things just to help us to know the summation of y, the summation of x, the summation of s squared, and then the summation of x and xy. The summation, the 300 raised to the power of 2 is 90,000. Now 250 raised to the power of 2 is 62,500. 350 raised to the power of 2 is 122,500. Now 300 raised to the power of 2 is 90,500. 250 raised to the power of 2, 62,500. And then 150 raised to the power of 3 is 22,500. Now we have calculated the s square, we have calculated the xy. Now we need to sum them. Remember that symbol, that look like how can I put it? That symbol that look like like these how can I call this symbol so that we can get it? It just stand for the summations of all these things. Now that we have calculated all these things, then we will now sum them direct. Some of us have used to Excel, you just drag down and drag down. Okay. Okay. Then let me remove this one so that okay, good. Now we have calculated for all this. We need to now write them down one after the other. The summation of x, summation, okay, let me just put it this way. Summation of x is 2,500. Now the summation of y is 1,500. The summation of s squared is 22,500. No, sorry, is 665,000. 600 and then 65,000. While the summation of xy is 300,000. Now we want to now plot it using this. Okay, let me do this. Let me fix this. I want us to be seeing the formula. Let me fix it. I want us to be seeing the formula. Let me just fix it this way. Okay, good. Now, I believe you can see the formula. You know, the first one that we are going to calculate for, we should remember this is our major aims that we want to achieve at the end of this thing. You know, summation of x of y is equal to a plus b and x. That is what we are trying to achieve. And then remember, I said the number one that we are to prepare first is b. Now we need to prepare for b first. That is the number one thing that we need to use. Remember, is the first thing when we are calculating for our high and low method. No, we first determine our variable cost per unit. The same thing applicable here as well. Now, our N stand for the total number of months. You know, we have from January, February, March, April, May, June, July, August, September, and October. If you count it, it's is 10 months. So our N stand for 10. 10. And then from the B, now they see the summation of coming B. Our B now is 10. As you can see from the formula, N
Sir,
open bracket N.
sir,
Then you,
I think there's a mistake in the summation. The
all right.
Y is 150, not 1,500.
You said
The Y, the summation of Y is 1,150, not 1,400. I mean in the summation,
1,000,
150.
1,150.
Yes, I mean
Okay.
in your summation note. Yes, thank you.
Okay, thank you. Let me check to know if it is correct. Okay, let me check. Sorry. Okay. Sorry. Okay. Look. Okay. 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 All right. Thank you for that observation. Thank you for the explanation. All right. So our summation of y is 1,150. All right. Thank you. 1,150. Good. All right. Now, you know, we are using Excel. Assuming it's something that we are writing, we'll be able to demonstrate this formula appropriately. But just know, just pay attention on how I'm doing it so that you can get the logical approach and then you'll be able to apply it whenever you are practicing it on your own. Now, our N is 10, and then into the summation of XY. You know, we are calculating for B. Summation of XY is 300,000. 300,000. Then you close the brackets minus summation, open bracket, summation of X. Now our summation of X, okay, sorry, I'm coming. Our summation of X is 2005. Then you close the brackets. Then you open another bracket as well. The summation of Y is 1,150. Then you close the brackets. Close the brackets. Then you roll it up all over. Then you come to the downside. You open the brackets, and then 10, our N start for 10, open brackets, summation of S square. Now, what is our summation of S square? Our summation of S square is 665,000. 665,000. Then you close the brackets minus summation of S square. Again, open brackets minus summation of S square. Our S square is 665,000. then you close the brackets, and then you close the bracket in total. Let me close this bracket too. Close the brackets. Now we have formed the B that we want to use to determine our variable costs. Now, if you are with your calculator, I want you to try it on your own side. While I'll be calculating it at my side here, we'll say 10,000 multiplied by 300,000 multiplied by 300,000. Now it gives us 3 million. 3, come here, 1, 2, 3. It gives us 3 million. Give us 3 million minus 2,005 multiplied by 1,150. Now it gives me 2,875,000. Okay, now let me do it. Okay, because I want to break it down. Now the downside, 10, which is our n, multiplied by 665,000. This one gives us 6,665,000 minus 665,000. Brackets here, and then brackets here. Now we have break it down. Now let's minus it one after the other. Now 3 million. 3, 1, 2, 3 minus 2,875,000. Now the first one gives us 125,000. 125,000. Okay. Let me see if I can just remove this so that we can all be seeing. Okay. I think we should be able to see it very well now. Now, the second one is okay, I'm coming. 6,665,000. 6,665,000 minus 665,000. Now, this one give us, okay, sorry, I'm coming on. I don't want to make a mistake here. Okay, summation of I don't want to make a mistake here, so that we can both be on the same page. Summation of a square. Okay, 2,500. 2,500. Okay. I'm coming. Summation of XY. Summation. Please, if you are calculating it for me, let me know. I'm having little calculation error here. Okay, this is square. Okay, I think there is something I detect from this formula. The second summation of x squared. It's supposed to be summation of x. Closing bracket raised to power of 2. I think this thing I've mixed it together. I'm coming. I've mixed it together. All right, give me a few seconds. Let me try to recheck the formula again. Coming. Let me try to recheck the formula. I want us to be on the same page so that we will not have issue. Okay. Okay. So now you can see the summation of B. This one, when I was trying to come up with it, I think there's a little error in it. So this is the formula for B. The only thing that changes here is this summation of X. It's supposed to be summation of X, closing bracket, raised to power of 2, not summation of X square, closing brackets. No. So I believe we can see. Let me copy the second one. So, I was checking the formula. Okay, so this one is the A. Let me just remove this so that it will not confuse us. Let me shift this and bring this one here. All right, good. Now, this one, we have to correct this very one. Okay, let me correct it from here. This one is going to be raised to power of 2. This one is going to be raised to power of 2. 600 raised to power of 2. But since it is X, this one is going to be 2005. So it's going to be 2000. So it's going to be 2005. While this one too is going to be 2005. Then raised to power of 2. Now, okay, we are still on the same page. The only thing that changes here is it's supposed to be X squared, closing bracket raised to power of 2, not summation of S squared. Understand? Now we will now divide this one again. I'll divide this again. 2005 raised to power of 2 is going to give us. Okay, it's going to give us. Please, you can do the summation there. 2005 raised to power of 2 will give us 6,250,000. 1, 2, 3. Then we can remove this once we're able to get it. Now we'll now say 6,665,000. 1, 2, 3 minus 6,250,000. 1, 2, 3. Okay, 6 million. 6 million minus 6,250,000. 1, 2, 3. All right. Now this one will give us 415,000. I want to believe that we're able to see where the error and how I try to adjust it. It's the formula that I pasted earlier. I want to bring a little bit of confusion. So now we will now say 125,000 divided by 415. Now it's going to give us 0.301 2. Now this is our B. This is our variable costs per unit. B, variable costs per unit. All right, so now these are variable costs per unit. 0.3012. Now we have determined our B, sorry. Now it's remaining our A. Now let's calculate our A. If you see from the formula say summation of y all over n minus b summation of x minus summation of x all over summation of x all over n. Now we have derived our b, which is our variable cost. We are now going to substitute this b in getting our a. Now this is what we are going to do. What is our y? Now our y is equal to 1150. Our x is equal to 2005. That is our summation of x. Y, our b is what we just derived now, which is this. Now we want to utilize the formula. Remember, the n still stand at 10. Now we want to now determine our a, which is the fixed cost. Now we now say summation of y. Our summation of y is 1150 all over 10 then minus let me just put the minus, let me show this. Okay, minus summation of x. But before we calculate it, we are going to sum the b, which is our variable cost, with the summation of x. We now say b multiplied by summation of x, which is our 2005. Now you see what it gives us now. It gives us 753 all over n, which is 10. Now to simplify it and get the answer, we'll now divide it one after the other. We'll now say 1150 divided by 10. Now it's going to give us 115. Then minus minus 753 divided by 10. Now it gives us 75.30. I believe we are calculating it as well. Now what are we going to do? Now we now say 115 minus 75.3. 115 minus 75.3. Now our A, which is the fixed cost, our A, which is a fixed cost, will now give us 39. Let me use Naira symbol. 39.7. If you like, you can approximate it to 40. So this is what our fixed cost is all about. And then if you remember from what is it called? From the steps that I showed earlier, after we have prepare our table, we're able to sort the formulas. We prepare the B, which is our variable cost. We determine the variable cost. Then our A, which is the fixed cost. Now, the next step is to now come up with our cost functions using our formula, which we say A is equal to y is equal to A plus bx. Now this is our formula for cost functions. Now we now say our y is equal to 39 naira, which is our A, which is the fixed cost, 39 naira point 5.7 plus our variable cost. Remember, our variable cost here is 0.3012. Now you now say 0.3012. Then you cannot put X, which is our level of activities. Now, this is what they are expecting us to get. This is what the management accountants or the money or the management or the management accounting students or as a management accountant, you are expecting to create your cost functions. This will now help us to determine our budget and budgeting control, by using these cost functions to prepare our forecasting, future forecasting, just to make up an organization to make decisions. The most important thing, the only difference here is we are using a statistical tools, which is linear regressions, linear formulas. This is what they're asking us to do. It's just the only thing that I just need to do, know how to utilize these formulas and know the first thing that you need to prepare first. We need to prepare our B, because when we prepare our B, we're able to arrive at variable cost per unit. Then we'll now substitute that variable cost per unit when we are preparing for A, which is our fixed cost. That is what we just demonstrate here. I believe we were able to understand this very well. Then let me share my screen. Okay. Let's assume they want to use this cost function that we just prepare to make a forecast. Let me just bring a very simple example here. And then also to demonstrate it for us to know how we can also use it to forecast a cost functions. Okay, Mr. Abdullah, do you have anything to say? I see you raising up your hand. All right. Okay.
Yes, sir. I have a question, sir.
All right, you are free to go, please.
Yes, sir. From the final answer we got, this the cost function y equals to a plus bx. I see that we substitute the value for a and for b. What about the x? Is it that the same 2,500? You multiply it.
Okay, and this x here, very good question. This x here is different. Is different from what we are using here. This x that we use here is based on the formula of linear regressions. But the cost functions formula on its own, if you remember last class, we were able to, break down these formulas for this x on its own stand for our level of activities. Understand? It stand on its own, different from the formulas. The reason why that you are saying that we are using an x and x here is because in linear regressions, when they come up with the linear regressions formula, they were able to come up with x and y so that we can use it to arrive whenever we are using a projections. We are using we want to determine a particular functions. I don't know if you have done business mathematics before. They usually use something like that, the same formula like this. But in determining cost function, this x is different from the one we are using for this linear regressions. Please, you need to understand that better. Maybe as just put it in the brackets, so that we can know it's different. This X is different, totally different from the one we are using in linear regression. The one we are using in linear regression is based on the formulas. But the purpose of why we are breaking down all this formula is to come up with this linear, is to come up with this cost function. This is the formula for the cost function estimate. Understand our Y, our A and B. When I was showing the breakdown, I'm still going to share when I was showing the breakdown from the notes. We say in linear regressions, we have the dependent and independent variables. Understand? So this X in this cost function stand for the total level of activities given to us. But in what is it called? In these linear regressions, we only use it to determine our level of activities so that we can arrive at the variable cost and then the fixed cost. Understand? And we can also assume that it stands for the total level of activities based on the formulas, the X. We can also assume that X stands for the total level of activities. If you see here from January to October, we sum the level of activities based on the month, and then it gives us this. It means the total level of activities from January to October is 2005. So we can assume that in this aspect too, our X stand for 2,500. Understand? Now, let me just explain this question in case we are giving an addition, or in this kind of in an objective aspect where they just ask us to use a linear regression analysis to make a forecast. When maybe they just give us some breakdown, maybe like to just use it to solve maybe like 2 or 3 questions. Now, let's look at this example now. You say the company is planning to make 9,000 units and wishes to estimate the total costs associated with that level of activities. Now, remember that we have come up with these cost functions. Now, I want to use these cost functions to help the organization to estimate the total cost function associated to these 9,000. Now, what we are going to do is very, very simple. It's just to substitute all these things. We'll just substitute them together. I'm coming. We'll just substitute them together. I'm coming. Just okay. We'll substitute them together. We'll say our Y is equal to, remember, 39.7. It's our A. While our variable cost per unit, which is B, is 0.30. Okay, 0.3012. Now, our total level of activities that the organization plan now, the summation of the total level of activities the organization plan for now is 9,000 units. Now, how do we calculate this to help them get the associated total costs? Now, very simple. You now say 35. Okay, let me first break this so that we can get the total variable cost. We'll say is equal to 0.3012 multiplied by the total level of activities, which is 9,000. 9,000. Now, this is our total, let me put in the right so that we can variable costs. Now this is total variable costs. I'm coming. Let me expand this a little. Now this is the total variable cost. You know how we arrive at this total variable cost? Our total variable cost per unit is 0.3012 multiplied by what the company plan, which is 9,000 units. You know, what they are planning to achieve in the future is 9,000 units. Then now we need to get the total variable cost. Now, remember our total fixed cost is 39.7. Now total fixed cost, total cost now that we are already know our total fixed cost. So all we just need to multiply by multiply the total variable cost by the total fixed cost. Now you now say the total fixed cost, which is 39.7, multiplied by the total variable cost. Now we have arrived at the total associated costs for this organization. I believe we're able to understand what the little illustrations. Okay. Someone is raising up a hand. You can unmute your mic and unmute yourself and speak, please.
Okay, sir.
All right.
That this total cost, this last one that you get now.
All right.
I don't know.
I'm coming. Okay. The one I just did now. All
Yes,
right.
sir.
Okay, I'm coming. I think it's supposed to be equal to. All right. What I did here is very simple. You know, the organization forecast to produce 9,000 units of products in future after they have already arrived at their cost functions, which the one we did earlier. And then the issue here is they want to ascertain the estimated associated cost to this 9,000 units using our cost function that we prepared earlier. What do we need to do? Remember the formula that we are using. We say y is equal to a plus b multiplied by x. Our y stands for total cost. Our a stands for fixed cost. Our b stands for variable cost. While the x attached to them stand for the total units of production that the organization plan here, which is 9,000. Now, what we are going to do is we add 39, which is our total fixed cost. Understand? We add it. You know what I did? The mistake I did earlier is I multiply. We're supposed to add it. You know, thank you that you raised up to ask the question. Now we are going to add it with our total variable costs. Now, how do we arrive at this total variable cost? You need to know that very well. You know, our variable cost per unit is what we use this formula to arrive. You know, the purpose is just to ascertain the variable cost per unit, what the each unit of level of activities can cost. And then if we assume to produce a certain level of total level of activities in future, how much is it going to cost us? That is when the total variable cost comes in. Remember, total variable cost per unit remain constant, while the total variable cost, the total variable cost remain change in the level of activity, but the unit remain constant. The unit remain constant. You have to get that logic. Now, the organization now plan to, in the future, they forecast to produce 9,000. And then they want to know the estimated cost associated to this. How are we going to know? That is what we just demonstrate here now. We determine the total variable cost using our cost function that we have prepared. And then the total variable cost gives us 2,710 naira 0.8. Then which our fixed cost is 39.7. Now, what we are going to do based on this cost function formula that we are using, we are going to add them. That is the reason why. So in this kind of question can come in an objective aspect. They will just ask you, and okay, you project to produce this particular unit of product, and then the associate can you determine the associated cost using the total cost? They will give you the total cost, and then they will give you the variable cost per unit. The only thing that is just left for you now to multiply the total unit they give you by the variable cost per unit, and then you add it together with your total, then you are free. You will be able to get the total cost associated to the unit. I want to believe that we get that explanation very, very well. Now, let me share the screen of our notes. Let me share the screen. Then so that we will just round up because we still have, okay. All right. Someone raised up a hand too. Okay. Please,
Mariam, so I didn't get you.
um,
You said to multiply what?
okay, okay. What I mean is this
Hello?
kind of I'm with you. Can you hear me now?
Yes, sir.
Okay, thank you. If this kind of simple questions, simple narrations come in the objective functions, they are going to be straightforward. They will give you the fixed cost. They will give you the variable cost per unit. Then they are expecting you to arrive at total variable cost and use that total variable cost to determine your total fixed cost. Understand? Now, they will just tell you that the company is planning to make 9,000 units of products or level of activities. They plan, they are forecasting. And then they wishes to estimate the total cost associated with the level of productions. Now, the first thing that will come to your mind is, what is the formula? If you do not recall the formula, it will be difficult for you to apply it. You need to know the formula. Y is equal to A plus B. Y is equal to A plus B multiplied by X. That X that you are seeing is the one that stands for the total level of productions, the total level of activities. So what you just do, multiply the fixed cost they give you, first multiply the variable cost per unit they give you by the total units, and then you add it together with the fixed cost. Then you arrive at your total cost. I believe you get the explanation very well now.
Yes, yes, sir.
All right, thank you. Now let
Thank
me share. All right, you're welcome. Now let me share the screen. Let me share the screens, and then we'll see how. I want to be a little bit more faster. The exercise that I come up to tonight is like two. This correlation and then the correlation coefficient. I want us to go and read more about it. This is the formula. It's just the same step of what we just did here. We went to be able to prepare your graph on how to sum all these things. Now, in accounting, we are trying to use a statistic tools to determine our cost functions. What if, as a cost accountant or as a management accountant, they give you some costs, and then they expect you to be able to break it down using your knowledge as a management accountant. When I was discussing on a cost classification, I was able to tell us how we can actually separate all those mixed costs. Where I was able to discuss, by behaviors, where I discussed the step cost, the variable cost, where we have the mix, all those things. There are some scenario that would come that we have some a mixed cost. And then they might not ask us to use high and low method. They might not ask us to use linear regression method. Now, we want to use accounting approach or accounting analysis. Let me put it that way. Where we're able to just to say, split the costs. I want us to read through these notes. So this is the question. Now I will just try to break it down, do the calculation, and break it down for us so that we will be able to know, just in case we are giving this kind of thing, and maybe we are actually expecting a regression formula, and then at the end they did not give us regression formula. This one is new. How are we going to deal with it? To avoid all those thought in the exam that can actually lead to something else. That is the reason why I just decided, let me just come up with this, and then let us have a little bit understanding. Okay. Did anyone raise up a hand again? You want to say something? Ajia, Miriam, did you have? I see your hand up. Did you still have something to ask? Okay.
No, sir.
All right. Okay. Now, you can see this question now. This is another question that we need to pay attention to. And this is where I'm also going to test our knowledge if we understand what we have been doing from day one. Where, remember, I asked us to do some cost classification, where we're able to separate which one is fixed, which one is a mix, and then which one is variable. It's only one person that submits. I'm still going to give us another exercise, and I expect us to also submit it in the group chat. Now, in this aspect now, as a cost accountant or as a management accountant, you want to help an organization to determine their costs. And in this aspect now, you are still going to use your cost function. But the only differences here is we are not using high and low method. We are not using regression method. We are using accounting approach. We are using accounting approach. Now, how are we going to do this? The number one thing is the requirement. Like I said, they'll always go to the requirement, please. Very important. Classify each cost based on variable and then fixed cost. Now, let's move. Let us waste time. Time is against us as well. So I need to be fast. Now, what we are going to do now, let me just copy all this one down. Let me copy it down and paste it here. Okay. Now, let me just read. They say ABV Airbus Limited clean aircraft between landing and takeoff at Nnamdi Azikiwe International Airport. The company wish to construct a monthly cost estimate for the business. The following costs were incurred in February. This is just a month. In February, during which 300 aircraft were cleaned. Pay attention. You now be thinking, where is our level of activities here? They are only giving us costs now. And we cannot determine our total variable cost without knowing our level of activities. But something is hiding here. They say the following costs were incurred in February, during which 300 aircraft were cleaned. That 300 is our level of activities. Now, this was now, when I was explaining cost classification, I referred to manufacturing company, and then I also referred to a service organization. In this aspect now, this service organization, we can say they are service organization. We can only feel their impact, but we cannot touch it. This is intangible service that they are rendering to the organization, helping the aircraft to clean whenever they take off and down. Now, the level of activities here is 300. You need to know. Don't just focus on the cost alone, because once you are just only putting the focus on the cost and you are looking at where is our level of activities here, you will become a little bit confused. Now, let me come in. let me see if I can break this so that, let me see if I can break this. Oh, I did not send me this one. Okay. Okay. Now, this the number one is classifying each cost based on the variable and then cost. Now, you just write variable. You need to write it down. Variable. Please, in the exam, this is how you will be doing it. This is how you will be doing it. This is very important. This is how you will be doing it. So that, okay, this one is, let me just put in 1,000 and then copy and paste it here in 1,000. Now, how are we now going to classify these costs? Some of you might be thinking, how are we going to classify? Now, let's look at it very well. Cleaning supply is fixed cost or variable cost. Cleaning supply, it means those materials that they are buying to render service to these clients, to these aircrafts. Cleaning supply, because without this cleaning supply, they won't be able to render these services. And then all these things.
Variable cost.
What did you say?
Hey, sorry, sir. I don't know that my mic is on.
All right. Now, because you need to, now they say cleaning supply is a variable cost of this cost. The material that they are using to render the service, because without this material, they won't be able to render the service. And the price of it can change at any time. It's not fixed. So now, in this aspect now, is variable costs. It's variable costs. What happened? Why did not paste? Okay, let me just use my hand to write it, not to waste time. Variable cost, 8,000. Now, hourly wages. You may be thinking, okay, this is the amount, this is labor hour. This is the amount they are paying to their labor. First thing comes to your mind. They are paying their labor based on their working activity, their working hour. If they render service to 200 aircraft, the labor hour will change. If they render service to 500 aircraft, the labor hour will change. So in this aspect now, this labor hour related to the service they are rendered. Remember when I was explaining, I think it's nature, where I was explaining direct material and indirect material. This labor hour are associated to the level of this activity, to the service they are rendered. So now in this case, this 5,500 go to variable cost because it can change at any time. Now, the next one is cleaning equipment. Cleaning equipment. What does that mean? It means the equipment that they are using. It can be maybe the washing machine that they are using. It can be the generator that they are using. All these ones, they are fixed for a period of time because they are indirect expenses. They related to the activities that they are rendering, but this particular cost has already been ascertained as at when the equipment is purchased. The only thing that it's affected them is they are charging depreciation on each of the equipment. Now, this maybe whether they are using, maybe when we get to where we'll be able to discuss more better the depreciation, where we are using a straight method and what's reducing balance method. So in this aspect now, this 1,000 is fixed costs. Now, manager salary as the coordinator is your salary is still fixed or it's changed at the level of activities change. You need to be thinking about it, supervisor. The organization employ you, whether the activities carry on or the activities did not carry on, they must pay your service. There is in Yoruba that say, Ogata Ogota, what does that mean? Whether the organization sell or they did not sell, they are going to pay the manager because they employ them. They employ the manager. in this aspect now, his salary is fixed for a period of time. Now, office rent, the administrative block where the organization is using is fixed for a period of time. They are paying for the rent. Whether the organization perform the activities to the customer or not, they are still going to pay this amount of money. Now, 650 is still stand. Now we have classified this now based on we have classified this now based on their classification, what they ask us to do. Let me submit manually. This is what they ask us to do. What is your problem? All right, maybe it's the way I copy it. 8,000, 5,005, yeah, 1,040, and then 650. Now you can see. Okay, let me show that. Okay, now the total cost that we are splitting into variable and fixed is this. Now the variable cost now, the total variable cost now is 13,500, while the fixed cost is 1,690. Now we have determined the total variable costs, and then they tell us from the questions. Okay, I'm coming. Let me unframe this so that we can see the questions again. Now, from the questions, they tell us from the question that the number of aircraft they perform these activities to is 300. Now, how much did the organization clean each aircraft? Since the total aircraft that they render this cleaning service to is 300. And then we're able to determine our total variable costs. Now, how much did they charge them per aircraft? How much did they clean each of the aircraft? That is what the number 2 is telling us. Calculate the variable cost per unit. Now, you come here and say, okay, the total aircrafts. Now, the total aircrafts is 300. Now, what is?
I think
Okay.
there's a mistake that will affect or still affect this manager salary
All right.
from first.
All
I
right.
think from the pay,
All right.
it's supposed to be not 400.
It's supposed to be okay. Supposed to be 40. All right. Thank you. Thank you for that. Okay, good. Supposed to be 40, not 400. Thank you. Now, the total aircraft that this organization renders service to is 300. And then when they are calculating all their costs, they are able to determine that the total variable cost that is spent to render service to all these 300 aircraft is 13,500. And then, okay, we want to know how much do we render the service to each of the aircraft? What is the variable cost per unit? It's very simple. Very, very simple. What you are going to do here is, since we have already know what is it called? Our total variable costs, then you will now say the total variable cost here is 13,500. Now, okay, 13,500. Okay, let me just go straight forward. 13,500 divided. Where's our division? Divided. Okay, what is wrong with it? I want to divide it now. Okay, divided by 300. 300. Now we get 45 naira. Now variable costs per unit. Now it's 45 naira. It means we render each of these aircraft the service to them at 45 units. The total variable cost 13,500, and then we render service to 300 aircraft. How are we going to get? Just divide the variable cost by the total aircraft. Then you arrive at your variable cost per unit. Now, we want to know our total costs. Remember, we are not calculating for fixed cost here because we have already determined it already. We will now construct the total cost functions, which is the third one. Very simple. Remember the formula. Let me still write it down. A plus B, because without knowing this formula, we won't be able to know how to use all these things. Now you will just say the total cost is equal to our what is it called? Our A is 1,690, which is our fixed cost, plus 45 naira. Remember, this 45 naira stand for our variable cost per unit, and then our X, which is our level of activities. Maybe they want to use the cost function for forecasting or budgeting, based on the first one that we did. Now you just press X. Now we have come up with our cost functions. We have come up with our cost functions. We say total costs equal to 160, just in case you do not get the 160, okay, plus 45 and X. Now this is where explanatory entry 1. Now then I assume that they plan to render service to maybe like 5,000 aircrafts. 5,000 aircraft. Let I assume that. And then we want to know the total associated costs. Total associated costs to render service to these 5,000 aircraft. Now, how are we going to do it? We have already arrived at our cost function. Our cost function is what we are going to be using to determine everything. Now, we will not say, since we are looking for total cost, all right, no problem. Our A here, which is a fixed cost, is 1,690. Our B is 45. Our level of activities, which is the total aircraft that we want to render service to, is 5,000. Now, the first thing that you need to come to your mind is we need to ascertain the total variable cost first. Now, how are you going to do that? Now, you just multiply 45 multiplied by 5,000. Now, you arrive at your total variable cost. I want to believe that we are on the same page. You arrive at your total variable cost of HK. Okay. Now, our total variable cost in this case is total variable cost. In this case is 225,000. Now, our total fixed cost, we have already know it, so we are utilizing it based on the cost functions of HK. All right. Now it's 1,690. Now what we are looking for, total cost. Very simple. Now this fixed cost plus total variable cost. Now we arrive at our total fixed cost. If the organization decided to render service for 5,000 aircraft in future. I want to believe that this explanation, we are able to get it one after the other. Now, this is where we will be stopping today. If you have any question, ask. So based on the one we have discussed, the regression, the account analysis. Okay, okay, you can unmute your mic and ask your question. Unmute the mic.
Okay, sir. My question is not on this second solution.
All right.
Is on that first solution, that total cost. I don't know how I'll try to get it, but I'm not getting it.
Okay. And can someone please help her out? Let me see if we are on the same page. Can someone help her out? Anyone? Okay, let me
We
explain.
don't understand.
What did you say?
So I didn't get the question. Her question.
Okay, now I believe you can see what we are seeing here. You know, this based on the linear regression that we first prepared, you know, where we prepared the first one using our formula, and then we're able to ascertain the cost functions. And then we now come up with another question. Like, let's assume that the organization projects to have their level of activities to 9,000 in future. And then what is going to be the associated costs? Now, in cost segregation as an estimation, the purpose is to help us to split our mixed costs. No, we can have is semi-variable costs. Semi-variable costs also stand for mixed costs. And then the main formula before this high and low method comes in, before this linear regression comes in, is what we know as cost function. You cannot just determine the total cost without breaking down the fixed cost and then your variable costs. Now, you ask that how do we arrive at this if I get your question very well. Remember that this is our cost function that we derive from the first one. And then the company is planning to make 9,000 units and wishes to estimate the total cost associated with the level of production. Very simple.
We added the total variable cost.
You said? Okay, what we did here, the first thing you have to do, know the total variable cost. How do we go know the total variable cost? If you are with calculator, multiply 9,000 by 9,000 multiplied by 0.3012. The 0.012 is our variable cost per unit. It's going to give you total variable costs, which is 2,710 naira 0.8 kobo. Then the total cost. Now we have already know our fixed cost. What comprises of total cost is variable cost plus fixed cost. It comprises of total cost. Now, since we have already come up with our variable cost now, the next thing to do now, add that variable cost to your fixed costs. I want to believe that you get the question clearly now. I want to believe that you get it clearly. Ajia, I believe you get it clearly.
Okay, you said for us to get total cost, we should add
Yes.
the variable cost plus the fixed cost.
Exactly. And it's going to give you your total cost.
So, okay, so now I know the variable cost, but I don't know the fixed cost.
The fixed cost is, okay, maybe it's because I did not write it here. Or maybe I just write to Y. Okay, let me write it.
39.7.
All right, thank you. Now, our fixed costs here is 39% of fixed costs is 39.7 total fixed cost. Now, this one is variable cost per unit. Now, maybe that is what is convincing. And then our level of activities. Maybe that is what is convincing you. I believe now you'll be able to understand. Now,
yes, I understand.
All right. Thank you very much. And this is where we end our today's class, and I want to believe that we're able to get what we have been explaining for the past 1.5 hours, close to 2 hours now. So in a brief, what we have discussed so far is about linear regression. We say linear regression is a statistical tool that help us to find the relationship between two variables. What is that variables? Know our units production and then the total cost. How can we separate them? Using this cost functions formula. And then we also discuss about why the linear regressions matters to management accounting. You know, the cost function, the cost estimation, it helps us to forecast decision making, and then it is more reliable than high and low method. You know, the differences. And then we also calculate the regressions using different approach. You know, the steps. You know, and then we also talk about the advantages and then the key tips that can help us to know how to plot this linear regression, where we're able to solve at least 3 questions relating to linear regressions. And then we also solve another questions using an accounting approach. And our next class is going to be on a different topic. We are ending our cost classification, cost segregation, and a cost estimation tonight by the grace of God. And then we are going to start from a fresh topic by Sunday. And then I want us to go all through this and then also try to solve some questions. What I will just do, maybe tomorrow, by God's grace, I will try to share some questions to the group. Let us practice. You know, practice make perfect. Practice the questions, regardless of what we have done this night, just for us to get the basis understanding. And then whenever we see the questions, we'll be able to apply what we learn in the class to solve those questions. And whenever you're having issues, try to write down your questions in the group. You know, we are here to learn. We are here to learn. We should see it as an interactive class where everybody contributes to learn. That is the reason why we are all here to learn. You know, we learn and relearn and relearn. And whenever you have any questions, even if it is not only in a management accounting course, maybe in general, you can ask the questions as well. And I will try as much as possible to understand based on my little understanding. So I want to thank everyone for joining tonight's class. And I want to believe that we keep on reading. And then at the end of everything, we'll be able to achieve our goals and our objective.
Yeah.
Okay.
I wanted to ask, the formula you first gave us for the A is different from the formula we
Yes. Now, what I'm going to do, sorry for the Dara formula, you know, when I was trying to come up with it, I will put the new formula in the group. Let me in fact, let me be putting it now. I'll put the new formula in the notes. Immediately I share it. No, this is the new formula that we are going to use whenever we are preparing for the course linear regressions. I believe you understand what I mean. All right.
Yes,
So, all right. Thank you, everyone.
Thank you, sir.
Thank you, and have a lovely night. Good night. Good night. Thank you. All right. Bye bye. Take care.